Okay, we are at Friday afternoon. Market is closed. It's May 13th. Let's do an update on the precious metals. We'll look at gold, silver, GDX, and we'll also look at the dollar because that really impacts the precious metals and really a lot of hard assets. So we'll look at the daily chart first. And again, we're starting with gold. You can see we've had this steep decline, right? Since this swing high here, which was a lower high, I mean, percentage wise, actually not that bad, about a 10% drop. And so we are on day 33. We've made another new low. Totally possible that this is an ICL, or excuse me, this is a DCL, daily cycle low. It is a failed cycle because we went below this low here. And so if we go to the weekly chart, we're on week 21. And so that's definitely in the timing band for a weekly cycle low, excuse me, an ICL, an intermediate cycle low, same thing. So it's 13, 14. Right. So next week will be week 21, and we would need to trade above, what is that? 1885 to get to confirm a weekly swing low. So really, okay, that's actually about $75 up from here. And of course, there's still a lot of resistance above there. But we're later in the cycle, and the fact if we can avoid sweeping these lows, that would be very positive. Given it looks like stocks probably put in a daily cycle low today, you would think that we've also put in a daily cycle low, but we'll obviously have to see how next week works out. The monthly still looking incredibly bearish. We have a, basically we have we're below two swing highs on the monthly. Not great. And if you look at the annual chart, it's definitely time to start, just taking a look at that every now and then. This is really just consolidation inside the big green candle from 2020. But, all things being considered, this doesn't look super bullish. I mean, look at this candle, right? If you looked at it not knowing what time frame it is, this doesn't look great. This is a big shooter. And then you find out that it's a yearly chart. Not amazing. But at the same time, we just had a short-term cycle low, possibly a weekly cycle low. So, there may be some upside for the next few weeks at least. Because if it is an ICL, you'd expect a rally for at least, even in a bearish cycle, maybe 5 or 6 weeks. So that's a decent time to rally. And then we'll look at silver, which was getting just creamed, right? So silver is on day 32. Silver was green today, which means it outperformed gold, which is a positive sign. That's moving in the right direction. And so silver is down 22%. So while gold dropped 10%, silver dropped literally double. That's not surprising. That's what happens with silver. You capture more upside, but you also capture a lot more downside. And for silver, not only did we go below this cycle low, but we also went below this one and this one. Oh, wow, and this. So, yeah, we really swept the lows essentially, which, like conversely could actually be bullish. This could essentially become a fake breakdown, right? So we're set up for a really easy daily swing low. We just need to make a high above here, right? So this candle is a high of 2111, right? And so, silver is definitely looking more like a DCL than gold, but if silver printed a DCL, I'm sure gold did. Important to note the annual chart. You see, we've got, we're below last year's high. That's not great. But we did probably have a short-term cycle low just now, so that could work out. And as far as the weekly cycle goes, we're on week 15, but given we've dropped 20% in a month, it's possible that that's enough bleeding that we could get, this could be a really, really early ICL, a really early intermediate cycle low. I've said this before, notice the COVID crash cycle, that was actually only 14. That was actually only 14 weeks. So that was incredibly short. And so it's totally possible. I mean, in that case, you dropped a lot more than 20%. You dropped, wow, almost 40. And the monthly, similar to gold, not looking great. Monthly swing high on the board. So we want to see some bullishness on the lower time frames to improve that higher time frame picture. And finally, we'll go to GDX. So this one is interesting because we actually almost got a swing low today, right? Like if we could have traded above 31.14 and we closed at about 30.86, that would have given us a daily swing low. So that sets us up for a very probable swing low on Monday, which gives us a daily cycle low on day 41. That would make Monday day 2. And notice how far below the 10-day moving average we are. That's this line here, right? So that puts you in like the, call it 33 neighborhood. So you could have a rally up to there and then even get a rejection. You just have to be careful for that early swing high. But looks like the markets are setting up for, a little rally next week. And the weekly, oh my God, this is just really ugly. I mean, the damage here. So we would need to trade above the weekly high, right? And that is 33.57, right? And again, so that's where, that's around the area where we would expect resistance. So it'll be interesting to see if we get that weekly swing low. Notice this is the same timing band as silver. So it's pretty early in the cycle, but it could be that we're going to get an early cycle low after a 28% drop. We'll have to see. The monthly is looking even more bearish than the other ones. I mean, look at this massive monthly swing high, right? Because this tells you that this is either a cycle that just bottomed on the monthly level, right? This is pretty ominous. So, and this is a good way to try to zoom out and think about the higher time frame cycles, right? Because again, I'll say it again, cycles are not mystical. There's nothing about like, oh, it has to be 8 weeks or it has to be, it doesn't, that's not important. A cycle is just characterizing a rally, right? An impulse and a retracement. And so those happen on every time frame. And so you want to zoom out sometimes and look at the larger ones, right? So this was an impulse and then a retracement, right? So this part was your impulse. This part was your retracement. That lasted 17 weeks, right? From low to low. So from this low to this low, from swing low to swing low. And that was your COVID crash, right? So that was a short, larger cycle, and that makes sense because you had this massive COVID crash. And then the cycle before that looks to be about 31 months, right? Sorry, these are months. These are monthly candles. So we're talking about essentially a 3-year cycle here, more or less, right? So the low was printed January 2016, and then this swing low printed, what is that? September 2018. So a very long-term cycle that peaked really early, right? This is month 1, 2, 3, 4, 5, 6, 7. So peaked on month 7 and then just descended for 31 months. And you can see this is a smaller time frame cycle that ended. This is a big swing low, and you had a little bit of a rally that also again topped out, and you had a double top, and then you had the real coup de grace. So this is your 31 months. This was 24. That was 29. And so you think about this 31-month cycle and then this short COVID cycle that happened, right? And again, there's nothing mystical about this. I'm just talking about an impulsive burst and then a retracement and then another impulsive burst. So we've now had an impulsive burst month 1, 2, 3, 4, 5. So we topped out on month 5. That was August, right? Everyone remembers that was when the metals topped out, and they've just been kind of sinking ever since, right? So August 2020. And then from there, you've just been descending, right? And so it's a question of where is that next swing low that marks the beginning of your next cycle, right? Is it this, right? Is it a 22-month cycle? Could be. If it were, that's a really bad sign, because that would mean this new cycle topped on month 3, right? Think about that. If this is your new low and this is your new rally, this would mean this rally has failed and it's rolling over. So it's also possible that we don't have a cycle low yet, right? And so boom. So that swing low is month 22. This is now month 26. And so let's think about that for a second, right? If this is month 26, and we know that if I go over to the weekly cycle, we're, only on week 15 of the weekly cycle that's usually in the 20-25 week range. Doesn't it make sense that this weekly cycle is going to continue? Maybe it ends on week 20-22, and that gets you to a, you know major cycle low around in the 30ish area. Call it October, maybe September, maybe November. These are all scenarios, but think about that. That's how the cycles kind of work together within each other. Um, Really important to sort of scenario plan. And finally, the dollar. I've been saying this. The most important thing to note: we are on month 16 of the 3-year cycle. If it's a 3-year cycle, that is 36 months. And you think about it, if we top now on month 16, again, it doesn't mean it's going to be a perfect 36 months. That means we can drop for another 20 months, theoretically, right? And this is a very extended rally. And so this definitely is in need of a retracement. Like, that's what happens. Look at this extended rally. And then we just chopped around for quite a while after, right? You got this extended rally, then you just kind of stop. This extended rally just torpedoed lower. So it's a question of when we top, right? Could be this month, could be if and when we have that monthly swing high that signals the start of the 3-year cycle decline. That is really big for risk assets. And again, if you think about how the cycles work together, the same way we just looked at GDX, we're on week 17. And so we're pretty late in the weekly cycle. And so that means we're probably going to start a weekly cycle decline soon. And we'll need to watch that weekly cycle decline for signs that it's turning, or it's going to actually be the 3-year cycle top. Again, another important thing to understand: cycles are nested within each other. So the eventual 3-year cycle top is going to be a daily cycle top and also an intermediate cycle top all at the same time. And so we need to really watch this next top that's potentially forming here. Big, big implications here.